Sanjiv Bhasin is now joining in on the show as well. And Sanjiv, what's your sense, given the fact that now we have seen the market sort of simmer down, the portfolio allocations in place? What does this spell out for the markets for the rest of the week?
Yeah, good morning. So, Avan, I think a large part of the, fall and pullback have been done with. You made new highs. I think you will ponder here for some time. The allocation of portfolios may give a little fillip to some of the defense railway stocks, which I think will see selling. The overall benign environment remains that you have to be a little neutral over here. I think technology, pharma, FMCG, those are the favored sector on seasonality, on USQs, and on local demographics. PSUs may give you trading rallies, but they are no longer going to be that output which they were. Secondly, if you read today, SBI has raised the deposit rate, which tells us that fund flows or liability franchise is not growing as fast, and you will have to sacrifice your NIM to get that extra cost of money, which for PSU banks has been a very benign environment. And if they are going to raise deposit rates, then there could be a little bit of quirkiness. We still think large cap banks offer better value, but IT is something which is exclusive. Again, Nvidia, Amazon, that whole basket is an outperformer, and IT India has not done much. I think the next leg of rally, the leaders will be IT. So we continue to be positive on IT, benign on the index. We don't think there is much upside. You have to also deal with the Fed, which is to meet day after tomorrow. And Avan, I would lay more stress on the upcoming budget, where a lot of the consensus would be has to be based with a lot of the tri-party agreements. So benign here, stock specific. I think IT and pharma and FMCG can be outperformers. That is where we are looking to up our portfolio and reduce it on PSUs.
Right. But Sanjiv, a lot of stocks as well which are in focus this morning, and I just want to highlight these block deals and spree of them which are happening off late. Now Interglobe, Enterprises, as the promoter entity, is looking to sell that 2% stake. I mean, we understand that they are incubating a lot of businesses and maybe looking at cash, and given that the stock valuation is at its peak right now, what better time than now? But there's Honasa, IRB, bunch of these block deals. What is it that you're making of this trend?
Correct. A very good observation, Aisha. And that tells you that a lot of the long-term money is actually trying to get out at these prices. And because of the fervor, because of the local retail flows, they are able to sell and still see stocks go at a premium. I mean, the Interglobe management has been selling all the way from 3,200, if I am correct. And the stock has only been going higher because of the environment, because of the business, which is doing exceedingly well. So in a bull market, anything which is lapped up is going to be good for slightly medium to longer term. But you have to be cautious on some valuation parameters also. Interglobe definitely has been a big outperformer. I would still go with GMR and Ashok Leyland, which I think are ancillaries to that. GMR because of the airport and the AeroCity, and Ashok Leyland because of the sheer bus weight, which is increasing their presence in all other places. Interglobe for me is a hold if you have it, but not an add. On the other hand, Aisha, like you rightly pointed out, some of these sellings is also related to reducing stake, and we have participated in this sell-off in this block deal of Emphasis. Emphasis, I think, will be arguably the fastest of the block in the AI segment. Their overall business verticals are doing brilliantly, and this sale by Blackstone is an opportunity to buy at a discount. So yesterday, yes, as a disclosure, we participated in that. We think this stock has a 20% upside, and it's a relatively safety place at an index of 23,300, where IT, I think, can regain its mantle.
All right. You also have the entire cluster of these PSU stocks, and it's interesting from the 4th June declines. Some of them have recovered: Mazgaon Dock, Rashtriya Chemical Fertilizers, BHEL, SAIL, etc. But Sanjiv, we were discussing earlier this morning that it won't be a synchronized move within PSUs, and one needs to be fairly selective. Is that something that you concur with?
Correct, 100%. I think there will be trading rallies. You got to be nimble-footed. And you got to be, maybe in places where the valuation comfort is now there. And Avan, just to give you a feedback, about 2 weeks back, we were very bullish on Bajaj Finance at 66, 66.50. We thought everything is priced in. And lo and behold, look, Bajaj Finance has gone back to 7,200 on the back that their IPO finance. So a large part of the underlooked at market, or where the momentum was lacking, those parts have done well. IT, FMCG, pharma. And I think PSUs now will see sell on rise, in the sense that they are over-owned and there was too much momentum, and they will see some, maybe consolidation. I won't say we will wait for results, but I still think that in them also banks is totally avoidable, but you can look at some of the defense stocks maybe as a proxy to growth, and some of the infrastructure plays in however well you can summarize those. So infrastructure and defense are maybe outperformers. The likes of NBCC, Hoodco still have more place, but banks, you have to be a little cautious.
Right. Sanjiv, I don't know if you've taken a look at HCC. I mean, there is a note from Elara as well this morning talking about how it's been one of those transition companies, right? That after a decade, slew of measures that they've undertaken, which includes debt restructuring, dispute settlement, non-core asset monetization, all of it, they finally, are back in charge.
Well, Aisha, I can only tell you, you're most welcome for a superb meal in my son's restaurant, because you and my, thoughts match. HCC has been my top pick from that 28, 30, 32 levels when it was languishing recently. We had it in our portfolio earlier at 16 rupees. Let me give you a brief. 6,500 is marked as an SPV, which is the Lavasa land, in which, quote unquote, Mr. Pawar has a huge stake. That has been siphoned off. They have 38% market share in nuclears, hydro, any other electrical or launching business. Your whole worldly sea phase has been done by HCC. If you went around Bombay and inside Maharashtra, their order book is, I think, humongous. And I think that this is a stock which has done nothing. It is in comparison to the other smaller players who had order books and backlogs. They have clearly earmarked what they had as an SPV. This stock, for me, is a doubler.
Yeah, absolutely. And I'm definitely going to take you up on that meal offer. But Vodafone, Sanjeev, and, news flow continues. This has been another of your top ideas. And now the board is looking to consider issuance of equity shares or, convertible securities as well. What are you making of this new development?
So, like I said, the whole AB group has been re-rated. By the way, Ultratech, my top favorite, top pick, has hit new highs. So has ABFRL, so has AB Capital, so has Grasim, and now Vodafone. It's a matter of time that Vodafone regains its momentum. Bharti is now an 8.5 lakh crore market cap company. Vodafone is struggling at 1.2. It cannot be either. Bharti the market cap is misplaced or not, because the ARPUs are set to rise, their 5G business expansion is online, and I think from this month onwards, their customer retention will increase. So for me, Vodafone is a no-brainer for 22, and we'll take it from there. If you are invested, stay there. The rest, do your diligence. But you must remember, there will be to's and fro's on debt recast, and so the biggest icing on the